Before we get to our market analysis with Ron Plain, there is an update on the porcine epidemic diarrhea virus. A team of scientists from multiple universities this week announced they had traced the virus to China. Their report found the 3 U.S. strains are most closely related to a strain found in 2012 in an eastern Chinese province. The scientists said the molecular clock analysis is consistent with the time frame of the outbreaks, December 2010 in China and May 2013 in the U.S. The U.S. PEDV strains also were found to share unique genetic features with a coronavirus found in bats, which doesn't necessarily indicate but provides evidence for potential transmission from different species. There are currently 18 U.S. states positive for the porcine epidemic diarrhea virus. Nebraska is not one of them. We started this week's market analysis segment with Ron by asking how he thinks PEDV has affected U.S. hog numbers.
Well, for the farms that have broken with it, it can be devastating. Death loss for young pigs at times over 99%. So it's a very impactful at the farm level. As far as national level, we thought we would see some indication in the September hog and pig report number, but pigs per litter was up 2%, set a new all-time record high. So not a whole lot of evidence there of an impact. We do get test data from laboratories regularly, and we've got 700 plus farms that are confirmed with the disease, but there's probably a fair amount of double counting in those numbers. So again, it's pretty fuzzy, Jeff.
You think there's some error in those numbers, you mean?
Well, no. There's no real way of determining whether it's a follow-up test on a farm. Say you broke back in June, and in October you retest to see if you've still got it. That's likely to be counted as 2 farms rather than 1 farm testing twice.
I understand what you mean there. As you look at the herd size, what do you expect to see there as we go forward and that corn and soybean crop starts to roll in and those feed prices lower? Do you expect that producers might try to expand here?
Well, history says producers can only stand profit so long before they start saving gilts. The market hog inventory in September 1 was up 0.3%. Fairing intentions up a little shy of 1%, but more pigs per litter. So yes, we're probably going to see the herd expand. Producers with sharply lower feed costs are going to be in a position where I think some of them are going to think about expanding. The real unknown and uncertainty and risk is, like you started this interview with, the PED virus.
Yeah, for those farrow to finish producers, what are they looking at for a break-even margin right now?
Well, we've gone from break-evens above 70 cents a pound on a live weight basis to under 60 cents, at least going forward at current feed prices. So 12, 15 cent a pound lower cost of production going forward than what we've lived with for the past year.
What's your forecast for those feed prices? Where do you expect corn to be, and then how affordable can soybean meal be?
Well, with respect to corn, we're probably going to see prices, between 4 1/4 and 4 1/2 a bushel for a lot of the crop here during harvest. Seasonally, you expect prices to move up as we go forward. We're probably going to see the same type of thing for a while on soybeans, but looks like South America is going to have a pretty good size soybean crop, and that should put downward pressure on bean meal prices later on in this winter and early spring.
As we've seen for a long time now, the supply of beef is very tight. As it relates to consumers in the grocery store, at the meat counter, describe to me what that competition will look like here between pork, beef, and chicken.
Well, there's probably going to see some growth in chicken numbers and more chicken in the meat case, and that'll keep those prices from rising. Both beef and pork set all-time record highs in the grocery store the last 2 months. Beef's going to keep going higher. There's no way that we can increase beef numbers very quickly. Incentive is to save heifers and expand the herd. That's going to tighten up the beef supply even more. So it's going to be record beef prices again in 2014, and a little bit more and a little bit cheaper chicken. And for pork, depending on how numbers go, we may see very similar prices next year to what we had this year.
As you mentioned in your written analysis at the beginning of this week or the end of last week, cutout values are extremely high for pork. What's your opinion on what we'll see here for the live market and then also on a carcass weight basis as we go forward?
Yeah, we kind of got a dilemma. Weights are up. Carcass weights have been very high. It was a cool summer and we've got lower cost corn, so that's not expected. Slaughter numbers have been running below year-ago levels. That's not quite what we expected from the pig report. So it's a tighter supply. That's kept carcass prices of hogs in the very high 80s to low 90s, which is very good for October. Seasonally, we should get the lowest prices of the year sometime in early December. I'm guessing we're going to drop on down into the lower 80s before we bounce back, but still a quite profitable set of numbers for hog producers.
Live market follows it too?
Yes, on a live weight basis, we're going to see prices slide from the mid-60s down to probably a few days in the upper 50s before rebounding early in 2014.